Welcome back, folks. Today we are discussing about a very interesting topic. Now, this is about fundamental principle that banks work on, which is called fractional reserve. Now, you must have heard this many times that people say, save money, save money. In fact, banks want you to save money and deposit that money into their banks. Now, the trick is that banks take your deposits and then lend that money to others or invest that money into various sectors like stocks, bonds, insurance, or commodity, depending on their risk appetite. Their only objective is to make crazy profit from your money. This is called fractional reserve. Now, here is how it works. Let's say you deposit 10,000 rupees in the bank. They will lend out 9,000 out of the 10,000 to others in the form of loan. They are only required to hold 10% of your investments in the bank. Imagine just 10%. Now, a lot of people think that their money is safe in the bank, but that's not true. No bank in the world is entirely safe. If there's a bank run, which means all depositors rush to withdraw their funds at the same time, the bank will not have enough cash to fulfill everyone's request. That's when a bank run happens, and it can be quite painful. There have been several instances in the past of the bank run. The most recent was just 3 months ago when prominent banks like Silicon Valley and Silvergate Bank in the United States faced a bank run due to their financial losses. The banks had no choice but to declare bankruptcy. It is similar to what happened with Yes Bank and PMC Bank in India. If a bank declares bankruptcy, customers are only covered 5 lakhs from the government. Earlier it was 1 lakh, but due to immense pressure from the opposition, the government had to increase that amount to 5 lakhs. So if you deposit 1 crore or 10 crore, it just doesn't matter. You're only covered for 5 lakhs in case of a bank run. Now the question is, how can a bank lose money? They make money all the time, people say. Well, that's right, but there are many ways that bank can lose money. For example, investing in risky assets like stock market, long-term government bond, or authorizing big ticket loans to housing project, or offering loan to businesses that are connected to politicians. If these investments do not work out as planned, the bank can incur significant losses. When a bank continues to show losses in their banking financial statements, investors may lose confidence in the bank and decide to sell their stocks, causing the stock price to plummet. This could attract negative media coverage and could cause a massive bank run if everyone panics and withdraws at the same time, which is a classic bank run. Now, what is the solution? Well, if you ask me, Bitcoin is a solution, because unlike traditional banking system, cryptocurrencies do not operate on fractional reserve systems. Instead, they are backed by 100% of the value you put in. For instance, stable coins are directly backed by the dollar with no fractional reserve involved. Now, this is the kind of transparency and security is what we should aim for more stable and trustworthy financial system. Crypto offers a refreshing approach to finance, and it's exciting to see how it can revolutionize the way we handle our money in the future. Thanks.